Welcome back to Alpha Recap, your end-of-day rundown from stockalpha.ai. The market day on April 27th closed as a bit of a patchwork rally, with policy and sector-specific moves doing the heavy lifting. As always, if you have questions, you can reach us at stockalpha.ai.
Nice to be here. So, markets closed with a selective rally. Not a broad-based melt-up, but clear winners and losers. Today felt like policy headlines met corporate action.
Exactly. And what really stands out here is how concentrated the momentum was. Cannabis, energy, including renewables, and materials led, while parts of technology, communications, and industrials struggled under execution and regulatory noise.
Right. That phrasing, selective rally, captures it. Some groups got a clear near-term catalyst. Others were left to sort through uncertainty.
Let's start with the big policy mover, cannabis. The markets reacted to fresh signals around a federal rescheduling pathway, plus a new DEA application portal. That pushed buying across operators, testing labs, and ancillary services.
And that matters because rescheduling can change the whole plumbing. Banking access, capital markets, and even tax treatment down the road. Analysts note it doesn't instantaneously fix everything, but it turned an aspirational story into an actionable timeline.
Yeah, that tracks. To put it plainly, rescheduling reduces legal uncertainty. If banks feel safer and capital can flow easier, that typically supports M&A interest and ETF liquidity. We've seen similar headlines spark mid-single-digit to double-digit intraday moves in the past. Next up, energy. This was a two-way driver. Geopolitical pressure around Iran kept an oil risk premium in place for conventional names, while renewables got a boost from project approvals. Total Energies greenlit about $1.2 billion for a wind plus battery project, and that helped project developers and supply chain names.
And on the conventional side, buyback announcements from major integrated energy companies sent a positive signal about cash flow and capital returns. So energy benefited from both price support and clear capital deployment plans.
Right, and that duality, classic oil support plus accelerating renewables, is why you saw materials and certain industrial pockets catch a bid too.
Speaking of materials, M&A in rare earths, recycling milestones, and new anode capacity orders were all supportive. Power Minerals made a key REE acquisition that analysts say shortens lead times for critical supply.
That one felt like execution finally showing up in the data. Capacity builds reduce tail risk for OEMs, and mid-cap and junior miners with visible assets may attract strategic interest. But remember, mining is capital intensive and still exposed to commodity cycles.
Totally. Balance sheet strength and offtake agreements matter a lot here. Companies that look disciplined will be less risky if metals prices mean revert.
Before we jump to tech, quick reactions. The real estate group was mixed. Institutional buying and big construction financings in logistics and prime NYC assets, but mortgage spreads keep things uneven. Utilities were also mixed. Micro-reactor rulemaking and grid modernization tools were positive, yet wildfire risk and load uncertainty remain.
Yeah, absolutely.
Now, technology, big mixed bag. We saw infrastructure support from a $1.1 billion AI fund and the legal resolution between two major AI players, which eased some cloud infrastructure questions.
But then there were offsetting headlines. GitHub moving Copilot to usage billing, a handful of data breaches, and regulatory scrutiny in the UK. So the sector ended up bifurcated. Infrastructure and enterprise AI attracted capital. Consumer and ad-dependent businesses were under pressure.
So what really stands out here is pricing models are still being tested. Usage billing changes can compress ARPU unless companies prove higher long-term monetization. It's a repricing, not necessarily a story killer, but it's not a green light either.
Wait, really?
Yeah, there's a clear distinction forming between AI infrastructure names, cloud providers, GPU suppliers, enterprise tooling, and consumer AI plays that rely on ad revenue or mass monetization.
Short reactions. Right. Interesting split.
Communications and media were mixed too. A surprise box office hit and live events helped content names, but cable weakness and regulatory hurdles around telecom mergers kept pressure on operators. Telco 5G standalone investments are a positive long-term story, but they also bring short-term capex and regulatory risk.
Industrials felt that tension as well. Reshoring and automation are positives, yet higher fuel costs, shipping risks tied to geopolitical developments, and looming EU compliance deadlines kept margins under scrutiny.
And crypto? Mixed. Institutional flows reported by CoinShares were constructive, and Western Union announced plans for a Solana-based stablecoin rollout next month. That signaled deeper corporate experimentation.
But security and governance incidents keep a risk premium on crypto. Institutional adoption is meaningful, yes, but it's contingent on custody arrangements and clearer regulation.
Let's pull out cross-sector themes briefly. First, policy as a price driver. The Cannabis signals and NRC microreactor rulemaking show how regulatory steps can quickly reallocate capital along supply chains.
Correlated gains show up across suppliers. Cannabis policy lifts retailers, packagers, and labs. Nuclear clarity lifts utilities, controls vendors, and engineering contractors. It's a neat domino effect when a policy moves from talk to rulemaking.
Second, AI funding versus regulatory friction. The $1.1 billion fund pushed infrastructure narratives, but pricing shifts and data breach headlines capped indiscriminate buying. So we've got a bifurcation. Infrastructure wins, consumer remains uncertain.
Third, energy transition plus classic energy tailwinds. Renewables approvals are lifting battery materials demand at the same time geopolitical risk supports oil prices. That's why materials and some industrials got pulled higher on both fronts.
Fourth, capital deployment and M&A. Institutional buys in real estate and consolidation in materials show that where policy and pricing clarity exist, capital is willing to transact. That can reinforce rallies by giving growth assets scale.
And fifth, institutional crypto adoption is real but contingent. Stablecoin pilots and reported inflows matter, yet custody and governance issues keep volatility high.
Okay, a quick list of the day's most significant moves and why they matter. 1. The Cannabis rescheduling pathway and DEA portal. It makes the policy timeline actionable and could unlock banking and capital if it progresses.
2. Renewables project approvals and microreactor rulemaking. Think clearer permitting and faster timelines, which improves return calculations for utilities and project developers.
3. Materials M&A and capacity builds. Those shorten lead times for battery components and rare earths, which can ease supply risk for OEMs.
4. The $1.1 billion AI fund and the OpenAI legal resolution. They reduced some funding uncertainty for AI infrastructure, even as consumer monetization tests continue.
5. Western Union's Solana stablecoin plan and institutional crypto inflows. Signals of mainstream experimentation, but still contingent on regulation and security improvements.
Those are the headlines that moved the tape.
Now, some informational insights that analysts were flagging. Not advice, just things to watch. 1. Reweight toward policy-sensitive pockets where rulemaking or permitting has actually happened, not just promises.
2. In materials and mining, emphasize balance sheet and cash flow resilience. M&A is constructive, but commodity cycles and CapEx make leverage important.
3. Distinguish between AI infrastructure and consumer AI plays. Infrastructure is seeing tangible spend. Consumer models still need to prove ARPU and margins after pricing shifts.
4. Treat crypto adoption momentum as conditional. Institutional inflows matter, but security incidents and governance gaps keep volatility elevated.
5. Watch energy duality. Renewables are advancing, but geopolitical oil risk keeps conventional energy relevant. Integrated companies that can balance CapEx and return cash are getting attention.
And 6. Monitor execution and labor dynamics in retail and consumer-facing businesses. Trade promotions, supply chain efficiency, and data moves can swing margins and near-term guidance.
We also need to call out risks that could flip today's narrative. Policy implementation can stall or be limited. Commodity price shocks would reshuffle winners and losers. New regulatory rules in tech and finance could increase compliance costs. And of course, execution risk, construction delays, permitting holdups can change expected cash flows.
Honestly, I was a bit surprised by how much of the rally hinged on actionable policy steps rather than just optimism. It shows the market rewards clarity.
Yeah, that was clear.
To wrap up, April 27 showed capital rotating towards sectors where policy, corporate action, and project timelines are aligning. Cannabis, materials, and parts of the energy complex benefited because announcements moved narratives from aspirational to actionable.
At the same time, technology and communications were being resorted. AI infrastructure and enterprise plays attracted capital, while consumer and ad-driven models faced pricing and regulatory headwinds.
Key takeaway? Expect selective dispersion to continue. Leadership will likely flip between policy-driven names and execution-driven stories as earnings, permits, and commodity prices evolve. Analysts note that diligence on execution timelines and regulatory implementation will be critical going forward.
Quick reactions. Right. Good summary.
One last thing. This episode is for informational purposes only. We did not recommend buying, selling, or holding any specific security, and this is not personalized investment advice. Analysts note market conditions can change quickly. Consult a licensed advisor for personal guidance.
Thanks for listening. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
That's it from Alpha Recap. We'll be back after the next close with more sector-level takeaways. Take care.